Gold has led the uptrend in precious metals this year, rising by over 65%. Silver and platinum, though, have upstayed the yellow precious metal towards the year end. Namaste. Gold has continued its glittering run this year. At one point in time, analysts did not give it a chance to go beyond $3,500 an ounce. However, it has remained firm to rise to multiple new highs this year. To tell us more about the precious metal, we have with us Mr. Sachin Jain, Regional CEO for India at the World Gold Council. Welcome to Business Line's Trending Commodity Picks, Mr. Sachin Jain.
So big thanks to you to get us on your platform as a World Gold Council. I extend my grateful, hearty gratefulness that you're giving us this platform.
At one point in time this year, there was a view that gold may not go beyond $3,500 an ounce. Currently, it is trading around $4,300 an ounce. What has driven gold to this level?
Now, when you look at gold, structurally, a lot of things have been moving, and we seem to be in a new phase of the world. Last 19 months, we've seen over 85 peaks of all-time highs of gold and different flavors of this rally that's been happening. So if you go back a couple of years, there was a whole conversation around de-dollarization, central banks buying, and so on and so forth. But I think largely, and if you look at more deeply, the fundamental reason of this rally has been, this whole credit in the world that's been very, very high. And compounded to that, there've been geopolitics that's not been stable. We're almost not living in a world where constant wars have been up. And I think this whole certainty last year was around central banks and the confidence that countries are getting to hold gold. This year in particular, it's been largely run by the financial markets and the almost assertion that gold seems to be a very well-performing asset class. And all the levers and all these sort of pillars on which gold is fixed on, which is a long-term hedge, its liquidity, all these things have panned out to be and have been transformed and sort of delivered almost on every pillar. And hence this rally. So I think geopolitics, the umpteen depths in the world and those ratios, and also the world which is moving from the reserve ratio, reserve currency, which used to be dollar, is now getting more and more invested towards gold.
The fall in currency is also helping the gold cost because investors seem to be hedging their risks.
Absolutely. I mean, if you look at it this year, the investment demand of gold is going to cross over $6 trillion. Now, if you were to translate that number in INR terminology, you're talking about 18,70,000 crores of gold traded per day. Now, which makes gold as the most liquid asset. And I think liquidity and holding on to liquidity is an important one with the current context of geopolitics where we saw with the Ukraine and Russia what happened. There were a lot of sanctions that are put on assets of Russia in different parts of the world. I think those have been the key triggers.
How do you see gold prices in 2026? There are speculations that prices could rise far higher.
So as World Gold Council, we don't predict any price. However, I can lay down certain scenarios for you. And I'll lay down 3 scenarios for you. So the first being that if there's absolute peace in the world, let's say, the US leadership and the China leadership and the Russian leadership, they all become like really hand in hand, we're great partners. The global debt comes down. The US debt, which is all-time high, comes down and recession doesn't kick off. I think in that scenario, you might foresee that the gold price might drop down to 15 to 20%. So that's a scenario, but a very, very limited possibility of that scenario panning out in the current circumstances. The second scenario is another extreme, which is that more wars get kicked off, nothing in the trade tariff wars get settled up, and more complications happen. All the anomalies between Middle East and even the Eastern world kick off. And there's more and more unpeace in the world. And with that scenario, I think the gold price might go up about 20%. And that also seems an extremely unlikely scenario. What seems to be is somewhere in the middle, that there will be some geopolitics that will continue. There'll be some trade war settlement for different tariffs that will happen. And in this condition, what we believe is that there'll be a moderate to high increase of gold price. Because as I said in the beginning, the fundamentals on what gold prices is built on are pretty much in favor of gold. So I think between these 3 scenarios, like can happen in any of these 3, but the probability of middle to a slightly more higher seems to be the most likelihood for the gold.
The World Gold Council came out with its outlook for 2026 recently. It talks of gold turning bearish if the Indian economy slips and pledged gold is sold. Can we have your comments?
Actually, yeah. So I'm glad that you referred to that report, because in that report, what we try to do is all sorts of scenarios. We're not sort of saying the probability of A over B or B over C, but we laid out all the scenarios. And hence the scenario that you're talking about is that all the pledged gold, and even we've analyzed the Indian context of a lot of gold that's come into the system in terms of giving it as a collateral, and it's come out as a financialization. And if the gold price, with what happens, there is a possibility that gets encashed and that gold is available for the industry to use. Now, in that situation, what will happen to the imports of gold? What will happen to overall demand? Those are the considerations. But the fundamental, if you read the report also, there are two real key parts. One is the jewelry demand, and we think that in the Indian context, whilst the price of gold has been, of course, unprecedented to any similar situation we've seen before, but the consumers have caught on in terms of, if the budget for somebody to buy jewelry was 100, with increased price of gold, it's not become 180, but certainly it's become 110, 120. There's been a bit of stretch. And the consumers are currently obsessed to old gold. We also seen that the higher end of the spectrum, which is jewelry beginning at about, let's say, 100, 150 grams to about half a kilograms, is doing really well. So the high-end consumer consuming gold is also elevating towards gold. And the core of that is, how is gold performing an asset class? That interest around ETFs, around digitization of gold, and all of those elements have been gaining momentum. So I think those key, if you look at those fundamentals, so there's an element as to where the gold is going to come from, and will it be in cash, or let's say recycling might go up vis-a-vis the imports. So that's the elaboration on the point that you just made.
Silver has gained more than gold currently. How do you see the silver-gold ratio moving in 2026?
Well, I think I'm not an expert in silver, but what I can say is that historically we've seen a lot of ratios between gold and silver that have been, in a certain way, which were distorted over the last almost 3 years. And with the silver rally the way it is, it's again now distorted on the other side. And I foresee some sort of leveling up as you go forward. Silver, as I hear, has been under deficit from a perspective of demand of, let's say, EVs and solar panels and so on and so forth. So I think the industrial demand has been very strong. And I think over the last 6 months, again, I repeat that I'm not an expert, but what I witnessed is that the financial demand and demand for silver has been always an all-time high. But it is to wait and watch as to what happens, because gold and silver operate very differently. The levers for gold are very different than silver.
That's all for now. Keep smiling and be happy. Wishing you all a happy Christmas. This is Subramani Mankombu signing off. Good luck.